Welcome to SIRA MCQ YouTube channel. Today we will discuss 2024 A-level accounting paper MCQ English medium. Question number, which one? Question number 9. This is the crucial point. This is the error correction method we use to find the answer. Look here. What is the requirement? They request the correct. Look here. The correct gross profit. They request gross profit, correct one, and net profit of the business if the goods drawing had been properly adjusted in the books of accounts. What is the correct gross profit and net profit of the business? Okay, if the goods drawing had been properly adjusted in the books of account. At this point, they request which this if means the goods drawing had been properly adjusted in the books of account. At this point, we can imagine that what the goods drawing are not accounted in the books. They request goods drawing had been properly accounted, adjusted in the books of account, the correct gross profit and net profit. In that time, I prepare the simple income statement. The income statement at this time, look here. This is the simple one, the income statement. Rupees 1000. This one is sales income minus cost of sales. Cost of sale, there are some more items. At this time we can prepare gross profit. This is the dial gross profit. There is a requirement. This is the highlighted point, gross profit, and after that other income plus other income, after that minus expenses. At this time we can prepare net profit. Think about, this is the sole proprietorship, again sole business. There are one ownership in the business. In that case, this is the gross profit, our requirement, and net profit. Okay, there is a impact, there is a gross profit is created. There are two items related, the mixing. What is this? Sales income and cost of sales. There are error of sales and cost of sales. They are errors, the sales income errors and cost of sales errors directly impact to the gross profit. Okay, now this is the question. Look here, the correct gross profit and correct net profit. Look here, during the year ending 31st March 2024, the owner of the business, the owner obtain goods costing 56,000 as drawings. There are drawing 56,000. Look here, no adjustment. No adjustment had been made in this respect in the books of accounts. There are no adjustment. They request us goods drawing had been properly adjusted. We must adjust goods drawing. However, the closing inventory had been ascertained based, ascertained means calculated. calculated based on physical stock available as at 31st March 2024. This is not directly impact, but this is the crucial point. The gross profit and net profit of the business for the year ending 31st March 2024 had been calculated before rectifying this error. Calculated rupees 250,000 and 120 respectively. Look here, the correct gross profit and net profit of the business. Okay, in that case there is a calculated net profit and calculated gross profit. What are they? The gross profit, firstly gross profit, and the net profit of the business for the year ending 31st March 2024 had been calculated. 250 means gross profit. 250. This is the current situation. This is the current situation. I prepare there's a gross profit 250. This is the current situation. Before goods drawing writing, the goods drawing adjusting before the goods drawing adjusting. Look here, there's the net profit. Net profit is 120. There's the second one, net profit 120. 120 net profit 120. This is the final result. Look here, there is a goods drawing 56,000. This is the goods drawing costing. The business of the owner of the business obtain goods costing 56,000 as drawing. Look here, what is the double entry? Goods drawing. This is a goods drawing. Goods drawing. Goods drawing. There is a stock drawing. Stock drawings means there is a business. The business has stocks. The owner drawing these stocks. This is the outflow of stocks to owner. Okay, this time what is the double entry? Double entry means drawings debit. Debit 506. This is 1001. Credit to trade account. Trade account means purchase account. Credit 56,000. What is the final destination of these shots? What are the final destinations? Drawings debit. Drawings means equity account. There is equity account at the SOFP, statement of financial position. Look here. Statement of financial position. There is a SOFP statement of financial position. At this time, this is the closing equity. This is the topic, closing equity. This is the opening equity, opening capital plus net profit. After that, you know, there is a minus deduction of drawings. drawings. 56, this one 56 is related to SOFP 56 deduction. This is the SOFP impact of this debit short. After that, this is you can think there is no impact of debit short to income statement. Why? This is the SOFP, statement of financial position. Therefore, I go to this short. Look here. Trade account. Trade account means purchase account. At the income statement preparing income statement, what are the elements? Sales minus cost of sales. Trade account means this up to gross profit. The trade accounts are related to up to gross profit. Gross profit means, look here, gross profit, up to gross profit. Gross profit, up to gross profit, there is a trade account. Trade account. Up to gross profit, there is a sales, there is a cost of sales, all are the trade account. This time, at the cost of sales, you deduction this topic, based on this topic, closing stock. You think this is the, after the closing stock, you deduct goods drawings. Which amount? 56. This is the short of this credit short. This credit short is related to cost of sales. This is the kingdom of cost of sales. At this time, this short is clearly impact to gross profit. Why? Gross profit is calculated using cost of sales and sales. There is new impact, the goods drawing. At this time, there is a crucial point. They says to you, look here, there is this one. However, the closing inventory means which one? Closing inventory means closing stock. Look here, closing stock. This one, closing stock. Okay, closing stock. Closing inventory had been ascertained, calculated based on physical stock available as at 31st March 2024. What is the physical stock? Physical stock means we can touch it. There is actual stock in the business. We can touch it. There is a one ice cream, there is a two ice cream, one ice cream, two ice cream. There is a remaining balance. We can touch it, and physically there is in the business. In that case, I explain you what is the impact to this one. In that case, I prepare another one. In that case, look here, there is a closing stock. There is a closing stock. Some questions reveal that there is a physical stock. Look here, physical stock. Physical closing stock. And the another questions, there is a report, closing stock as report. Reports closing stock. Closing stock. There is closing stock. The main thing is there is another information is goods drawing. There's a closing stock. Look here, closing stock. We use the values. The physical closing stock was 1000. No, look here, 1000. No, 100. Physical closing stock means 100 stocks available in the business. We can touch it. And goods drawings are there. There is a 20. The physical closing stock and the goods drawings are related to the, look here, this is related, the same one. Look here, they are at the income statement preparation, cost of sales. At the cost of sales point, the closing stock and goods drawings are line by line. There is an impact to cost of sale. At this time, there is the same one. At this time, this one, the physical closing stock and the goods drawings means a separate person. Okay, what is the word? This is separate person. Why? Separate one. This is the another separate person. Separate. There is no mixing. Why? This is the physical closing stock. Physical closing stock means there is no persons at the closing stock. There is no person. There is a drawings. No. After the drawings, there is a physically, actual remaining stock. Physical closing stock means actual closing stock. At this point, there is no drawings in the physical stock. There is no drawings in the physical stock. At this time, there is separately we can account 100. There is a actual closing stock. There is a goods drawing. This is the actual closing stock. There is no impact to goods drawings and there is no impact by goods drawing to physical closing stock. There is a closing stock, no impact to drawings. At this time, what are the destinations of these? At these destinations are, what is income statement destination? Income statement destination. Income statements, you know, sales, cost of sales. At this time, there's a physical stock, closing physical stock was which one? 100. There is an actual one. There is a drawing, goods drawings 20. There is a separate persons. Why? This is closing stock is physical one. At this time, this is the major point. Look here, the reports closing stock. Reports closing stock means the computer excels. Computer revealed what are the stocks. The computer displayed that this one is remaining, closing the remaining stock. At this time, we cannot clearly, this is the actual one. Why? There is a computer stock. But this one is physical, actual. This one is reports. Is, look here, 120. At this time, another information is goods drawings 20. At this time, goods drawings are not accounted. Not accounted means there is no accounting entry to drawings. At this time, this time is not accounted. At this time, not accounted means there is no deduction is in the computer for the goods drawings. Look here, there is no goods drawings accounted. At this time, these goods drawings are not deducted from the goods of closing stock. Why? There is a reports closing stock means computer closing stock. This computer closing stock is error. Why? The goods drawing was 20 not accounted, but physically is actual one. This is not related to accounts. Accounts means computer accounts. This is a physical stock not related to computer accounts, and goods drawings are not related to computer accounts. But this is the computer accounts. There is no deduction from this closing stock. Therefore, we can use the actual stock is not there. Why? There is a 20 drawings. 20 drawing is there. What is the actual remaining stock is 100. Look here, 100 is the actual one, not 120. The closing stock is 100. Why? The goods drawings impact to computer accounts. At this, after the computer accounts are rectified, the actual physical one is 100. What are the accounts? The destinations. Destination means income statements, sales minus cost of sales. This is the final one. At this time, there is a minus closing stock. What is the closing stock? Closing stocks 100. Why? This is the actual one is 100, not the computer closing stock is not correct. At the computer closing stocks are not correct. Why? The drawings are not deducted. Look here, the closing stock is 100, goods drawings 20. There is the same impact. This the difference means the physical closing stock and the reports closing stock. What are they? The physical closing stocks are revealed in the question. The physical closing stock is separately from drawings. There is no impact between goods drawings and closing stock. There is actual, but the reports closing is not correct one. Drawings is okay, not correct one is computer stocks. The physical stock is there is no impact to other accounts. Why? The physical stock is actually accounted. In that case, in that point, we can clearly go to the goods drawings. Closing stock is a physical one. There is no impact to goods drawings. There is a goods drawing impact. At this time, goods drawing, look here, trade account credit means we must minus deduct from the cost of sales. At this time, the credit short, I use the major one. There's a gross profit. What is the entry pass? You know, goods drawings deduct from cost of sales. I deduct from cost of sales. I deduct from closing stock. There is another one. another closing stock, no, goods drawings 56. There is another column 56. At this point, what is the impact to gross profit? The cost of sales deduct by 56. At this point, there is a cost of sales is deducting. There is a cost of sales is deducting. Why? There is a cost of sales. Look here, this is the purchasing now, the major one, purchase now. There is a deduction from purchase. At this time, cost of sales are deducting. Why? There is a, look here, the thing, there is a cost of sales is this circle 100. Again, we deduct 56 from this purchasing. At this time, there is a deduction of the final result. The final result means cost of sales is minus. Cost of sales is deducting from 56. Cost of sales, this circle, cost of sales are deducting. Why? There is a deducting short to cost of sale. At this time, cost of sales are deducting. There is a small one. There is a small cost of sale. There is a small cost of sale. There is a small cost of sale. There is a small circle in the cost of sale. At this time, cost of sales, cost is deducting. The cost is deducting. The gross profit must be increased. Another method, I said that the gross profit is credit one. Look here, gross profit is credit person. Profits are credit persons. Look here, this double entry, trade account credit, no? Trade account credit. The trade account means this done. The gross profit is credit person. This short is another credit short. At this time, this person is credit person. They like credit persons. The gross profit is credit person. The new short is credit short. They must add 56. Why? This 56 is credit short. This one is credit short. Credit plus. At this time, we can plus to gross profit. Look here, plus to gross profit. There is a crucial one. I explain you cost of sales. You can easily identify this gross profit is credit short. There is a credit short impact to this one. This is drawing double entry. Trade account credit, no? The credit, this person gross profit is credit. We must credit plus. At this time, I can plus this 56. At this time, there is an impact plus to gross profit. There is a gross profit net profit person. There is a gross profit, no? There's a gross profit. So, net profit. There is a net profit. Finally, the net profit is calculated using gross profit. At this time, there is a gross profit. There is an impact to gross profit. At this time, automatically this one is impact to net profit. Why? Look here, this is the net profit. Sorry, this is the net profit. Net profit. The gross profit is sub account. Sub account. This is the gross profit. Gross profit. There is an impact to gross profit 56. At this time, automatically impact to net profit. Okay, there is a head. There is an impact to head. Gross profit. Automatically they impact to legs. Legs means net profit. At this time, I can plus 56 to net profit. What is the correct gross profit? No, this is the 250 plus 56, 306. Correct gross profit. Net profit is 176,000 net profit. There is impact. No, there is answer. Gross profit is correct one is 306 and 176. Answer is gross profit is 306, net profit is 176. Answer is 5 for question number 9. Question number 9, answer is 5. Answer is 5. There is a crucial point is this one. This one, what is the double entry says? Double entry says trade account credit. Trade account means this one. Trade account means this sales, cost of sales and gross profit. The gross profit is credit there. At this time, the credit short are impact to addition to gross profit. This is the answer. There is a discussion of question number 9. Question number 9. Let's see. After the next video, we meet question number 10.